All right, welcome back to Yahoo Finance Live. Brian Sozzi's take today: investors, cash. Sozzi, I have questions about what exactly the story is, and I guess my question is this good or is this bad?
Well, let's read the numbers first here, Myles. So UBS out with a new, their usual sentiment survey. And in this survey, and it surprised me, these numbers, they say 62% of investors hold at least 10% of their assets in cash. And the average investor, according to the sentiment survey from UBS, hold 22% of their assets in cash and cash equivalents, such as CDs. Now, the main reason why they continue to do this, 41% of investors said they hold cash as an emergency fund or to protect against a potential market downturn. 48% of investors are holding cash because they are waiting for the right investment. And to your question, Myles, is it good or bad? It could really be looked at a couple different ways. I think it could be good. Maybe investors are waiting for the market to pull back a little bit. But it could be bad because they're missing on returns and inflation is going up and their money is earning nothing. So it's an interesting, thought-provoking survey, Julie, at least in my view.
Yeah, I mean, it is interesting and thought-provoking, although I'm trying to figure out who they asked, right? Is this wealthy individuals? We know that the savings rate has gone up. So this kind of goes hand in hand with that. You know, it also speaks to, when you say, is it good or bad? It goes to that old saw, there's cash on the sidelines, which is sort of one of those cliches that bulls like to say, that there's still cash that can be put to work. But people still have to decide to put that cash to work. And if they're looking for the right opportunity, if that is indeed what they're waiting for, there aren't any pullbacks happening in the market for them to find that opportunity. So I don't know where that money would go if they are making a decision at some point to invest it.
I mean,
I look.
Rich, poor,
yeah, it could be. It could be going into tech stocks. It is interesting. You know, Myles, you, I guess, would like to call dry powder. There's a lot of dry powder out there.
There's a lot of dry powder, particularly dry powder in the private equity space. No, I think, look, rich, poor, or otherwise, I don't think that anyone who is overweighting cash to quote unquote wait for an opportunity is ever going to find the opportunity they want to deploy that capital into. I think if people choose to keep a higher cash, in their portfolio, as has really been a trend since the financial crisis for a variety of reasons. One maybe being that 15 years ago, the global credit market basically froze up and almost crashed the entire economy. That would be a reason, maybe sit in some more cash. Or having just gone through a pandemic where it did seem for a week or so like the world was going to end, could also be a reason to have higher cash. But, to your point, Julie, about the bulls are always saying there's cash on the sidelines. I feel like the cash that's on the sidelines has decided the sidelines is where it would rather be than in the market. And I think that you talk about allocations within, bonds to stocks or out of certain stock styles into other styles. I think those conversations are real, but I think the three of us have seen enough articles and enough data in the last 15 years around how much cash is sitting unused in portfolios to know that your advisor might tell you should have 2%, but if people want to have 6 or 10 or whatever the number is, they're going to have 6 or 10. And that's just kind of the way it seems that things are going to be, particularly if we're talking about, high net worth individuals and so on and so forth.